everybody, and welcome to podcast number 16 of The Real Estate Show. I'm Cherie Selley, and with me is the amazing, talented, and beautiful Judy Steenland. And boy, we just have a lot of fun together. That's all I can say.
We do have fun. It's fun getting together and having these conversations.
It is. I mean, even this week, and we got together at a house. We did this incredible shared open house for this very high-end listing, and you and I were in our beautiful clothes picking weeds.
That's right.
In the front of the lawn. I mean, that's where our relationship goes. We go to the nth degree.
It's not all glamour, folks.
No, and we should have done the Instagram reel, shouldn't we?
We should have, because I remember you at one point tugging like with both hands and going straight backwards and in your beautiful clothes and your heels.
Yeah, I landed straight on my, you know what, and it was pretty comical.
Yeah, it was great. Good times.
But we were talking in the last podcast, in podcast 15, about what happens as far as the experience of a fake deed of trust being filed on my seller's home. And we did get that resolved, but it was fraudulent. There was something against the home that should have never been there. It was a fraudulent document. And I think you brought up such an important conversational piece to add to that is the things that a buyer, even a seller, but especially a buyer, they're more vulnerable actually to some of this. And sellers are actually with the proceeds of their home, I would say. But please go back into some of the other things that can be a potential risk.
Right. So we just talked about, the statistics going even higher for security breaches during COVID. I don't know if that's because hackers had more time on their hands or, what was going on. But this has been something that's been on the rise for a number of years now. And so, these security breaches will allow someone to infiltrate someone's email account. And a lot of times they're in your account for a long time before anything happens, and you would never know it. But they're looking for opportunities to steal important information. And when you're buying a home specifically, many times there's wiring instructions for the down payment money, or if you're paying cash, the entirety of the balance of the home. And so we've heard the horror stories, and they're true stories, that someone will be watching that email exchange. They'll say, hey, this person will jump in and say, hey, these are the wiring instructions, and will send false wiring instructions. And once that money has been wired, it's gone. So we've heard the stories where people have lost their entire life savings.
It happened to one of my clients.
Yeah, so it's a real thing.
One of my clients who I had worked with, they were buying a home in Utah. And there was an email that got intercepted it looked like it came from my client. And it actually came from this false whoever. And that email was sent to the title company in Utah saying that, this is where the wiring proceeds were supposed to go. And it wasn't. And that account was actually somewhere in the Cayman Islands. It's not traceable. And they lost their they lost all their money to be able to buy the home. B, that was their entire life savings. And I can tell you this, though. I cannot believe how amazing he handled that news. And this was a few years back, actually. But he made a sermon about it and talked about forgiveness and overcoming. And I can't believe his attitude, because that was probably one of the most horrific things I've had anybody go through that I've personally known. Yeah. And I wasn't representing them when that happened. They were working in another state in another purchase, but I had worked with them before. And so just knowing that happened, wow, anybody is vulnerable. But I think there's some very important advice when people are working with title companies and working on providing information that title companies need, because they do need things like social security numbers. They have to verify that you are who you are. They need that information to draw up their documents. They need your loan information. And they need your bank information if you're going to wire money from a closing into your bank account.
Yeah.
But Judy, give some advice on how that can be done more safely.
Well, for me personally, when we're talking about wiring earnest money or proceeds or whatnot, I am not the middleman in between that. I give the contact information to the title company, to whoever it is that needs that information, and they have a conversation. They don't rely on the email. They validate the numbers, and it's always a phone call. It's never relying on email documents alone.
Yes, always.
Always.
Because so our client needs to directly talk to the title company,
Yes.
to the closer, and never give that information to anybody else.
Yeah.
Not even to us. We don't want to hold that.
We don't want the responsibility of that
No.
either. Yeah.
If you think that our office is emailing you for your driver's license or social security or major credit card number, unless
we will never ask. Yeah, we will never ask for that.
We will not ask for that.
Yeah.
So people have to understand that the only source that really needs some of that information is the title company. Legitimately, talk to them directly.
Yeah.
Best advice. This is a national thing. It's not just Colorado.
No, it's everywhere. Yeah.
That's good, Judy.
Yeah, that's important information. It seems so simple, but it's super. It could save you your entire life savings.
And if you're putting your whole savings into buying a home, some of the unspoken questions out there right now, or they're spoken, everybody's wanting to know: are we in a housing bubble? Are we in a bubble? When is it going to break? I literally, right before we started this podcast, I got a text from my client going, our home's still selling at $100,000 over the list price. Well, the answer is it depends. But I mean, the homes are still selling over their list price.
Yeah.
And, they're just, some people are waiting, quote, until the bubble burst. But their own bubble may burst first before the real housing bubble burst. And I think, Brian Buffini put out a really good amount of information, a good slide about this, that I think people have to know why this is a different market than it was the market back in 2007 when things were starting to go awry. And I think one thing is simply existing homes nationally. So back in 2007, there were 4 million homes that were on the market. So think of this, 2021, the population for the United States is more. I didn't study that stat. I don't know what it is, but it's more. And we only have 1.16 million homes as a national supply. So think of that, 4 million at one point versus right now, 1.16.
With more people.
With more people. And the most cash that we've had ever. And lenders are not doing, we've talked about it in previous podcasts. You know this. I mean, lenders are not doing the loans that they used to do anymore.
No, the buyers are coming in well qualified, and the equity in homes is so much more. So even as I read that the moratorium was being extended till July in many states. I know Colorado is not one of those states where we have a high number of those, but even as that comes to an end, even those homes where people may have been behind, they have a lot of equity, and the equity is continuing to grow because the values of the homes are going up.
That's
so
right.
It's not going to be a foreclosure market more than we might see some more homes hit the market,
because there will be equity in those homes to sell them and not foreclose.
Right.
And down payments are up. You mentioned it.
Yeah.
Statistically, Buffini says that the down payment in 2007 was 9%. 2021, it's close to 16%.
Yeah.
As the average down payment. So people have more money to put down, which means there's more room if there is volatility in housing prices, where they're not going to foreclose.
Right.
The other part is fixed rate home mortgages. It says before the 2008 market crash, more buyers gambled with the adjustable rate mortgages.
Oh, yeah.
Do you remember those?
I do.
Oh, and back in 2007, that was about 15% of people that were buying. Now in 2020, only 4%.
Yeah.
Tiny amount of people that are gambling with the low interest rates right now.
I was going to say, with as low as the interest rates are, yeah, that's not recommended.
Absolutely.
Yeah.
So, and lending restrictions, as he says, are tight. So there's a lot more that I think is positive still about this market than negative. And for Colorado Springs, it's just, job surges. You have some really good highlights about the city that I think you should share.
Well, I think that, just as we watch and see the new industry and business activity that's going on, we've been hearing a lot of the new things that are coming in. We've got one of the major hotels here. It's an older hotel that they're converting into 600 new apartments. We've obviously got more apartments being built around the city. But then the commercial development over in the Flying Horse area, and this new developer that's coming in and has this vision for really a product that Colorado Springs doesn't have. And so that's shops and lofts and dining, and
they want to create a whole new urbanized type of lifestyle, not in downtown, but it would be north.
Right. And that's where we're seeing so much development and growth. And because I personally live north, I would love to see that.
Wouldn't that be fun?
That would be great.
And they're looking at putting this high density development together, but not smashing it into what's existing in Flying Horse. There's land right outside of there that it would be appropriate for something like that.
Yeah.
We need that actually up there. But how fun to have like walkable spaces to go shopping and something. This city is just, it amazes me every day. What's happening here.
Well, and I did see on the Forbes top places to live, Colorado Springs made it again. And so, there's a lot of reasons why people want to come here. And just to have, again, people come here because of the open space and the lower density, but there are some things that would really be nice to have that we don't have yet.
Mm-hmm. Yes, that's right. So there's still room.
There is still room.
For creativity, for growth. This city is not what it was before. Well, even since you've been here.
Yeah. So it's, hard to believe, almost 3 years now. Mm-hmm. And we're seeing a tremendous amount of growth. Even, talking about new communities and new construction, we're seeing, I got an email from a builder and they just released more lots. And so I think we're going to see this continued growth, and it's a great place to live.
Yes, it is.
Yeah.
So we are so excited that you've tuned in. Thank you so much. And we hope that you're getting value out of these podcasts. Please continue to follow this. We're going to continue to give you updated information. We want to be your guides and help you navigate through this real estate market. And it's so fun to do this with you, Judy. So thank you so much.
Thanks,
and we'll catch you next time.
See ya.
Okay.